Morning everybody, it's Chris here from Serene Education with the 4 majors and notes update for the 18th of October 2011. Hi guys, hope you have a fantastic trading day yesterday. We saw a lot of momentum yesterday. I myself are up 73 pips as it stands of this morning on the euro against US dollar, which I'm going to be talking about right now. So without further ado, let's get cracking. Okay. Bearish engulfing yesterday at a price support and resistance level. Very interesting. Are we psychologically seeing a tipping of the hand from a bullish stance to potentially a bearish stance overall? A failure to break above a prior resistance level here. You can see quite clearly 13,900, just below the 1400 mark, was also psychologically a long-term support and resistance level. As price has been moving higher, yes, the actual trading range of each of these up candles has been getting weaker and weaker. 1400 we know psychologically is a very strong support and resistance level overall. Yes, and we also had a prior resistance and support at the 13900. So psychologically, two areas there. We're going to consolidation band. But as I mentioned, the actual price action of the candles were quite bullish to start with, but as price has been hedging higher and higher closer to this psychological support and resistance, the trading ranges got smaller and smaller. And then yesterday we saw price headbutting the 50 period moving average, a prior resistance level, and weakness started to show in some of our indicators, and we started seeing more bearish sentiment creeping in. A lot more people were selling their contracts instead of purchasing further, and that ultimately gave us the setup that we're seeing now, this bearish engulfing. Just want to also point out that price was actually trading at a 50% retracement area. So this was the initial bearish move to the downside. This bullish upside move was a 50% up move from the initial downside. So sitting at that 50% area, and now you can see on the Asian market session we're trading at the low end of the wick. Slight pullback, that's the norm. You'll notice that we had a prior consolidation before we saw upside on. So that was Thursday's candle, that was Friday, Monday. So this little consolidation here, where prices, you can see this, the ceiling level here at 13,800. If price fails to break higher than that, then obviously what we're seeing is bearish consolidation against potentially the ultimate downside in this case. So if we look at our intraday chart, look at our hourly for example, you can see quite clearly that we have seen a breach of upside movement. Notice the 50 period moving average here, this purple line acting as great support, higher swings dictating upside movements, and then we had a consolidation. You'll notice that the price action got stagnant. The actual wicks of the candles were getting smaller and smaller and smaller. Look at that, big moves, bigger move. Oh, that's a big move, slightly bigger, bleh, and just faded out. All that coming around a resistance level. You wanted to see exhaustion candles around that level on the candlestick patterns to give you a real confirmation that there was psychologically a change. Sure enough, we started seeing wicks. Here again, bearish engulfing. This is an evening star formation at a resistance level. We had up candle, indecision candle with a nice long wick, more selling sentiment, and a bearish engulfing. Classic evening star at a resistance level. Want to see those candlesticks at a resistance level to definitely give you confirmation that price sentiment is changing. And then you could have actually traded the break, prior resistance, support, breakout, there we go, and then you start looking for the downside move on this case. A lot of support and resistance going through here. Ultimately 13,700 is going to be your next potential target, because that is looking to be quite a nice support and resistance level. But you can see during the Asian market session we had a slight pullback, and that pullback is kind of faded. You can see quite clearly there's a number of candles there that are getting in the way of price action to the upside. Yes, our CTC is giving us a bar, but obviously potentially you want to see price trading above this little consolidation range up before we see even another attempt back up here at the 8400, or sorry, the 13,8300 mark, and potentially higher. So what are you doing now? You can see on our 30-minute chart, clear resistance there as I mentioned, little higher swings going into this setup the first time. What we're having over here is a indecision, primarily because we've got blue and now we've got red. So wait for the red candle to give you that confirmation for further downside movement. If that's the case, then obviously, or ultimately 13,600 would be your first initial target. Then 13,600 would be your second target in this case. Break below 13,600, wow, then we're looking at a lot of fresh air here, a lot of clean air right down to the bottoms here at 13,300 potentially. So let's see if it's materialized. Let's see if we get a kick to the downside. Might see a bit of consolidation here at the lower pre of the swing here before we see further extensions further to the downside. Institution moving average being breached for the first time in as many weeks on our 30-minute chart. Is that confirming bearish sentiment? Okay. Price has to be trading above that to be bullish, or if price is trading below institution moving average, then we know it's bearish, and it's bearish for the first time in 20 periods of this particular time frame. So 30-minute, 230-minute time frames, we're now seeing bearishness because we're trading below it for the first time. And you can see right through the most part of the Asian session failing to trade higher than the institution, as well as that price support and resistance level here at 137800. 50 period moving average moving in above it and just pushing it lower. So got to see your CDC on your 5 and 50 minute also giving you sell signals to confirm that direction, then go with it. Next up is sterling against US dollar. Let's look at the daily time frame. This one not as forthcoming as the euro against US dollar. However, still failing to break some support and resistance levels in the past. You'll notice here slight consolidation below the 15,900 mark. Price failing to reach those levels. Price support and resistance in that area. Ideally 1600 is the psychological support and resistance level. However, you can see quite clearly that there is some sort of resistance level here just above 15,8500 mark. We've had yesterday's candle failing to break above that 15,8500 mark quite clearly there. So if you want to just go for the wicks of that. Consolidation. Interesting thing though is prices fell to trade lower than 15,7500, which happens to be a price support and resistance in the mid part of September. So quite clearly seeing a bit of support, then a bit of resistance. So price support became resistance, and we saw the continuation over. Yeah, we've been in this, we've broken through, failed to materialize above that prior resistance level here, and we are now trading in this consolidation range. So pretty much trading between 1575 and 1585. So this 100 period or 100 pip range on the pair. The most important thing over here, though, you can see that sterling for the first time in as many, since early August, late August, we've seen price trading below the institution moving average. And you can see the 50 period moving average acting as a great ceiling level here. Then we saw the bounce. We saw price pretty much finding support here, long wick with a lot of price action at the top here, forming a nice juicy hammer, and then we saw price heading higher. Now what we're seeing is from that initial move here to the pullback, there we go, a lot of price action around the 61.8 fib extension. So this is the first initial move, then we had the pullback, and this is the extension now of this first initial move. Ideally you want to see 100% being breached or reached as our first target. If it gets to 161.8, then we know it's way overextended and we should see correction. But what normally happens if you see an initial move out of support area, then what you see is a first extension followed by a pullback, and then you're looking for the second extension. So bullish engulfing, get in there, and then you're looking for your extension higher. I know that the institution moving average was there, so that primarily would mean your first target. Price pulled back, but didn't pull back all that low. It actually pulled back to the prior resistance level in this case, finding support, and then reattempted on two occasions since. Breakout, a lot of wicks to the downside though, a lot of hesitation as we've gone over this area. We found support and we bounced higher in the past couple of hours. So ideally the institution 200 period moving institution moving average now has been breached for the first time in a month. Okay, are we going to see that now follow through? 100% would ideally be our next target here at 15,900, and guess what, we've been there before in the past just recently. So that's going to be quite interesting to see materializing. So as long as price can stay above this 15,700 mark, then ultimately our long-term goal would potentially be the upside. As long as price is making higher swings, those lows are getting higher and the highs are getting higher, then ideally we're seeing price action moving to the upside. I did mention though, price is trading between 1585 and 15,700. For all you guys that are trading bigger time frames, entry level here potentially, if you wanted to, would be the upper end of 15,800. A break of that would definitely look for further continuation high, because now about trading above this level here is definitely confirming that support has been found at this institution moving average, and we're kicking higher. Sentiment is driving it higher. if we fail to break above 15,8500, we start really consolidating, and what could ultimately be happening is just a consolidation against the major trend. You can see here we've been major is down. If I plot a fib retracement area, you can see the extension. We had a juicy bounce. Where's that bounce taken us to now? It's roughly around the 38.2 fib mark. Okay, if we find support at that level at the 38.2, we can see prices trading above it right now as we speak. There we go, at the 15,7900 mark. Then we could look at the 50% extension here at 59. Guess that, 59.95. There again, there's that number again. That price support and resistance at 15,9500. That could be our next potential target on our long term. And ultimately 61.8 is taking us way back up to the levels way above the 1600, which we know 1600 on our daily and weekly charts is that very strong support and resistance level. We've seen price testing this on a number of occasions through the first part or the latter part of this year, and then through the mid part of this year. So we know psychologically that 1600 is a very, very strong price support. We're trading below that for the first time through the latter part of this year, through September. Are we going to see this breakout? This is just a pullback, and then we're going to see on this on a bigger time frame. This is just a pullback against the major downtrend. So that's what we're seeing: breakout, pullback, continuation. That's the setup you're looking at here. So this is just a pullback against the major bearish sentiment that we're seeing. A lot of this buying here was just fundamental news. It's just buying against the trend, to be honest. So a lot of wicks, a lot of hesitation in this area. As long as it's still trading above 15,7500 above the institution, then we should see price kicking higher. Ideally, a break above 15,8500, as I mentioned, would be potentially what we're looking for. A failure to see price trading above those areas would see that we are just consolidating against the major trend, and we should see price reattempting those prior lows. One thing to notice that we had higher upswings, and price has now breached that as we got into it. Swing high, consolidation against this area, and now we're moving sideways. So we need to see a break below 15,7500 psychologically to see any prior resistance here at 15,6800 is our first target. Second target down here at 1560, and ultimately lots of fresh air down to at least the 15,3500 mark, which we know is another very strong price support and resistance. We saw a lot of support found on this pair going back to mid parts of last year, 2010. So see breakout, major upside trend that we've seen recently, and now we've seen price just recently bounce off that because psychologically they saw that is their first target, or the breach of 1600, and then that would have been their first target. Psychological bounce higher, and now we're seeing a retracement. Are we going to see a failure soon around this area to see correction in the market, and we're seeing bearish sentiment creeping in? Moving on to the Swiss franc, US dollar, Swiss franc, good old Swissy. We know that this particular currency pair has been pegged, and we saw this massive upside movement that occurred from it. Okay, very, very interesting. Price action yesterday I mentioned in the video blog. We wanted to see, we're potentially likely to see a bounce, a corrective bounce, because we're trading at this upside trend. So bounce above the institution moving average, above this daily pivot area. Major support. It is a prior very strong support and resistance level. You can quite clearly see here through the early parts of March, April and May. A lot of contact with that particular area, and then we saw a bounce higher. That correction only going up as far as a previous support and resistance level, which happened to also be a lot of support through the early parts of or latter parts of December, early Feb, and then a lot of indecision through Feb and March before the breakout resistance, and then the continuation lower. So bearish engulfing at that area, at that particular area, and then we saw the first, well, the potential first target being price support and resistance, which is where we're trading at now. However, yesterday the candle on Friday closed lower than that, and the only thing that was in the way was pretty much this upside trend. And sure enough, yesterday's candle, we saw it slightly testing the low end, but that bounce still occurred, and that bullish engulfing actually engulfed the past 2 days with the trading. So Friday and Thursday's trading range has been engulfed, and now we're finding support above that area. Ideally, what we want to see is price now push higher than that. You can still see the 20-period moving average is there. Price action at the moment on the Asian session, we've seen a slight pullback. Nonetheless, still above that 89, the 89.50 mark. Ideally, we'd like to see it trading above the previous a resistance level. You can quite clearly see the bodies of these 3 days, consecutive days, has been resistance. So ideally a break higher than this, then potentially long term you're going to be seeing price retesting those highs that we saw back in the early parts of October. So that's what we want to see today, is the 89.50 being our support, intraday support. If you look at our 4-hour chart, you can see CTC is telling us we should be looking for shorts, yes, but we have the institution moving average below us, and we are testing this price support and resistance level. Ideally, we'd like to see a bearish engulfing candle. Not very convincing, these candles here. We want to see a bearish engulfing candle like that on our 4-hour. Ideally, trading below this institution moving average to definitely clearly see that we are moving to the downside. 20 period should be below the 200 as well as the 50 would definitely confirm that. We are seeing higher swings, however, but the last previous swing still trading lower than the previous one. Okay, very, very important. Lower swings will dictate price action. In this case, you can see that 900 happened to be a price support and resistance level, price support and resistance. The shooting star, bearish engulfing, and the same thing over here. We had a bearish engulfing here set up, and it only took us down as far as that because we know psychologically that 89.50 is our very strong support and resistance on our daily. So as long as price is trading above that area, 89.50, then we should still psychologically be looking for potential upside movement. Even though we're getting a sell signal on a 4-hour, we've got to be trading above that. For the 4-hour to be definitely giving us a bearish signal, we want to see the CTC in our favor. Yes, we have a blue arrow here, so not everything going in our favor at the moment, but we've got to see a break below 89.50 and a bearish close below the institution moving average in particular. So back to our hourly, you can see price bounce, and we're still this potential bounce here that we saw just in the early parts of the Asian session is now seen price moving higher. Notice, however, that the previous swing or the previous resistance level is still above us at 900. Ideally, we want to be trading above that, which will give us a bit of clean air, at least up to the institution moving average way up here at the 906 mark, 905, 906 mark to start with. So ideally, got to see 900 being breached in our hourly in 30 minutes to definitely give us any potential upside movements. As I mentioned, 900, this is a 30-minute chart, guys. Really getting down to the small. You can see a lot of indecision now as we're pretty much coasting sideways along this major support and resistance level here I mentioned at the 9500. Price has been below that before, don't get me wrong. And this is where it's so important to look at your daily time frames, because this you could have been triggered in. Trading on smaller time frames, you could have been triggered into all this only for price to go against you. So have a very, very good understanding of what it is that you want to trade and then trade it. We don't want to be trading all this these fake outs. They can really get in the way, and they can just be bloody annoying because they trigger your trades and then they go against you and you end up with a losing trade as it stands. But you can see that even on 30 minutes, you can see lower swings dictates price action to the downside. Bang. As of yesterday, if I'm not mistaken, yes, we saw a price break higher and back up against the level, but most importantly for the first time, though, breaking above this downside trend on the 30-minute chart. Lower swings dictates downside trend. Now we've broken higher, now we're consolidating, potentially looking for upside move. Putting all these wicks together and all this price action in this consolidation range just makes one big juicy hammer. Long wick, but more price action at the top. I'm going to use my box pattern. You can see there's more price action here and less down the bottom. These candles, now if you take all the stuff and you bunch it together, will make one long wick followed by a heavy candle to the upside. More bullish sentiment is still trading higher. Potentially gives us an indication we're potentially looking for higher swings. Okay, we've been in a downside trend. Notice the psychological support here. Price has to be trading below that. If price is still bouncing above this, all this area, all this momentum over here is trading at the upper end of the trading range and not a lot at the bottom. So these little fake outs here all come together, forming one long wick, and all this price action at the top over here all come together and form one big hammer trading range at the top. It's pretty, I can't draw something on the chart here for you. Ideally it would look something like this if I can do freehand. So that's the wick, and I'll draw a little box on the top. There we go. That's what we potentially seeing on our chart. Okay, negativity, boom, 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 and then at a support area, a very strong support area, this is occurring. So more price action happening in the top end, so there's more buying into this market now than there is selling. People trying to pull price down, failing to. More price action at the top at a support area is confirming potential hammer formation being formed. Ideally 900 has to be breached, because by doing something we're trading well above this consolidation range, and we should be looking for high extensions. In this case, we're looking for our highs. We were not so long ago way up here. Would be ultimately our first target. So let's keep that in mind. Last pair of the day is US dollar Japanese yen. Oh, this is crazy trading. I mean, look at this. Massive upside move, really potentially starting something that's just going sideways. This particular pair is so frustrating. And one of the reasons why I tend to stay away, but I won't be, I won't tell a lie. I have traded before, but you got to have patience. And if you don't have patience, well, stay far away from this one. Big upside move. We potentially want to see the highs here at 77.70 being breached for further indication of potentially looking at the 79 or 7800 mark here being tested, which we saw before the 80 mark. So ideally, if we saw price punching higher than this, then 77.70 break higher, then you could clear two potential targets. A lot of free air, not a hell of a lot of noise in between these two moves, which will take us back to the institution moving average, and the 80 happened to be a prior very long support and resistance. Since then, consolidating against the major downside trend. You can see if I just zoom out, the overall trend for this is still negative. A lot more red than blue, and that just shows you on the chart. However, we saw a major upside move just recently, and then that failed to materialize. Then we saw another reattempt, still trading above these moving averages, the two smaller time moving averages. We had a crossover recently. Our CTC went blue for the first time, but guess what? Didn't fail to materialize. And now you can see the bodies. There seems to be a resistance level now at that area. So 77.30 here definitely seems to be body resistance. A lot of wicks, but bodies don't seem to be wanting to go higher than that. So you can either look at the bodies or the wicks. Look at that. Also consolidation at 77.50. And 77.50 we've had price support and resistance in the past. Just once we've had a bit of breakup, but you can see the bodies over here as well, also very stagnated. Price not going much. So what do you need to see? Well, if this is to continue potentially looking for bounce higher, it needs to be trading above all this junk, this consolidation. Ideally 77.70 needs to be the breach. Otherwise we're just pretty much going bounce. We're just consolidating, and it can be really, really irritating, because you're not really making any gains, and all you're doing is just wasting potential. A lot of price, time in particular. So do you want to trade something that's going sideways? It's entirely up to you. Myself personally, not really interested. I want one or two things to happen here. I want to see if we're going to see further consolidation sideways. Then yes, it's just going to range between here. Yes, you can get some pips from this. Don't get me wrong. You can still capitalize from that. Myself personally, not really interested, because I'm not really getting a really good bang for buck, if I'm putting it, and time wise too. So for me, two things need to occur. Either break below the 76.10 here. In this case, I see bearishness to the downside. Otherwise, a break above, ideally the 77.70 here, to see upside movements. Until then, not really interested. That's it, guys. I'm going to leave you off for that. I'm not going to even go into these smaller time frames. I mean, it's just itchy and scratchy. I mean, this is crazy trading. Look, I mean, you can profit from it. I'm not going to argue with you guys. But wow. Yeah, the breakouts are fantastic, but they don't move that far. They don't move that consistent, and you just end up getting into the trade, and you're just breaking profit or breaking even, and then for price to go against you. It's just crazy wrong. So I tend to stay away from it. So I'll leave you on that note. Have a fantastic trading day today. Make sure that you look at the news to see if there's any major news announcements that are coming out. We know on what you got sterling today. We've got CPI year-on-year figures, expecting a higher reading on both the CPI and RPI year-on-year figures this morning. Euro, we have the German economic sentiment, expecting a lower figure than the previous. So a higher figure than the forecast. We'll definitely see some upside moving for Euro. Otherwise, we could see further potential downside. This afternoon, we've got a lot of news on the US dollar. We have the PP month-on-month figures, which is important. They're expecting a slight 0.2% increase there. Then we have Mr. Bernanke speaking later on this evening at 6:15 p.m. GMT, and then Governor King also. So lots is we could potentially see some moves later this evening because of that. These two boys obviously will probably be saying something in their speeches that could reflect on what's likely to occur going forward. So if you can dissect their Morse codes that they tend to talk in, we might find something that might actually move price in our direction. Fed might say something, Bernanke might say something that might push the US dollar to higher highs. We know that the US dollar has been gaining strength there. The US dollar index has been peaking. And Governor King, are we going to see something that might move the dollar, the pound higher? We are trading above major institutional moving averages. Could we see extensions higher, or are we going to see bearish sentiment creeping in as we've seen on the euro, and we're going to see price falling lower? It remains to be seen. So yeah, just do your analysis. Keep it simple. Keep your trading simple. That's the beauty of the CTC strategy template. Just stick with it. Keep it simple. Keep smiling, and most importantly, trade serenely.